Good morning, traders and investors around the world. Welcome to this Friday, May 4th edition of Pre-Market Prep Plus. Joel Elconin, joined by Matt Bryson, Senior VP Equity Research Hardware at Wedbush Securities. What a great day to have Matt on. Let me run down the futures markets real quick, and then we got some big earnings reports to talk about today from AMD, and just take a look, a deep dive into the hardware sector. S&Ps are up 10.5, 41.79.5. Off the pre-market low, kind of hanging out mid-range on the session. Crude having a good day, up $4, right on the nose, 106.40. Gold languishing at the 1870 area, down $1.20 at 1869.20. Silver down 23 cents, 22.43.5. Bitcoin, it's down $1,400, 39,035. And then Ethereum futures, they're in the green as well by $95.50. Let me stop the screen share here. Bring Matt in here, and let's just go right to the big dog. Let's go to AMD's report, and then we can talk about the price action and what you're looking at moving forward. Good morning.
Hey, good morning, Joel.
All right, AMD. I mean, they're liking good price action here. How did they perform according to your standards, and what are you looking at moving forward?
Yeah, so AMD again beat numbers, and I think that at this point that was expected. The surprise in my mind was how robust the guide was. So not only did they give us a strong Q2 guide, but they also talked to their organic growth moving to the mid 30s year on year versus previously they guided towards the low 30s or 31%. The important thing there is that they also talked away the PC weakness in the sense that they said they are seeing weakness. They now believe that the PC market will decline in the high single digits, and they're going to grow despite that, because on the PC side of things, they are shifting to more premium products, which helps their pricing. Those markets have been less hurt by the shift in lower demand, but more importantly, they're seeing such strength on the server side, such strength on the console side. Their embedded business is growing at a rapid pace, and so the robust demand in those markets is really what's driving their optimism. I think that had been one of investors' major concerns, that simply they wouldn't be able to again raise the guide. I think the other concern had been that the Xilinx was going to be dilutive, and they said on the call, this is an accretive acquisition in 2022, and so I really think they went out there and talked to any point of fear that investors had, while giving a great guide.
So that's back on. It's like it was on again, it was off again. So that's back on. What about what's your price target on AMD?
I have a price target of 165, Joel, and so the way I get there is I do have a high multiple. My multiple is 31 times next year's earnings. But having said that, and I know semiconductor multiples have compressed, and there are concerns around high multiple stocks. What I would point out is AMD is growing at 35% this year. And so the multiple is still below what their likely growth looks like. And they'll continue to show robust growth in 2023, again, benefiting from their share gains in servers, where Intel really doesn't have a competitive product till Granite Rapids, and that's 2024.
All right, so let's move on to a stock that closely follows that. NVIDIA trading up today in sympathy with this one. Just what a fall from grace here from the end of April, $290 to under $200. The Bitcoin mining was supposed to be a big thing with NVIDIA. I'm not sure how that is taking things. What's your short term and long-term outlook for NVIDIA? And I mean, if you had to have a preference of one over the other, what way would you be leaning between NVIDIA and AMD?
Yeah, so we have a neutral rating on NVIDIA versus an outperform on AMD. So my preference is AMD. I think when you look at NVIDIA's near term outlook, the concern is really around client graphics cards, and they've seen a substantial performance boost over the last 18 months that shouldn't go away in calendar Q1. AMD had very robust results from their graphics card business. So that's not a concern this quarter. It's more moving forward. You hadn't been able to buy an NVIDIA RTX GPU for well over a year from retail. Now they are becoming readily available. They are selling at manufacturers MSRP, so suggested retail price. And so I think the concern is simply that revenue stream had doubled, and is that really sustainable? If that revenue declines, it clearly has some effect on their forward earnings outlook. And so that's my near-term concern with NVIDIA. From a longer-term point of view, I think they are the clear leader in AI. They've established a great position in terms of wins around autonomous driving. And so stepping 3-4 years out, and even in the gaming space, they are the market leader. I don't really see any threat to their share dominance. Stepping 3 to 4 years out, I think they're in a great place. I just want to see that graphics card, the bump that they've seen in graphics and the forthcoming decline resolve before I look at the stock a bit more constructively again.
Where do they fit in the metaverse, and what's your take on the metaverse? I mean, didn't Facebook come out and say like profits from it in 2030? I don't know if that's what you want to hear if you're a Facebook shareholder. But which stock fits better in the metaverse?
So from a metaverse perspective, I think that really fits into NVIDIA's strength. So whether you're thinking about the required AI processing at the data center level, or whether you're thinking about the graphics processing at the device level, clearly NVIDIA is well structured to take advantage of that opportunity when it appears. And then when you look at what they've done in terms of enabling metaverse applications in the corporate environment, they've taken a leadership position there as well. And so what NVIDIA has done in the AI space is they've built this large software infrastructure that really advantages them in terms of winning new customers, but also locks customers in. And it feels like they're setting themselves up to do the same thing in the metaverse. In my mind, it's rather more a question of when does the metaverse become a more tangible, usable construct than it is today, versus NVIDIA being well positioned to take advantage of it when it appears.
All right, so let's talk about the dog that I own in this sector, Intel. I mean, they can't seem to do anything right, getting down to some monthly support, 42, 43, 42.60 has been the major support here. Should I just cut the pain in this one? Or I keep telling you, Intel's coming back, but what the stock does is move lower. Talk to us about Intel.
Yeah, Joel. So with Intel, I think the struggle is that a lot of the investment that they're making, when it shows up in their top line, is going to be 2024, 2025. So it's really them going back and restoring dominance on the manufacturing side. And if they are capable of doing that, it filters into their products in the sense that if you have a better manufacturing process, it is easier to build superior products. And so it's them getting to the place where they're at least at parity with TSMC, if not in a better position than TSMC. and that will just take time. And so the struggle that I have with Intel is you look at AMD. AMD says, yes, the PC environment's getting worse. And we're factoring in, almost a double-digit decline in PCs. Having said that, we're going to beat numbers. You look at Intel, they talk about PC sales getting better in the second half. And yes, the PC market's not quite as robust, but we still see an uptick in the second half. And it feels like whereas AMD, in giving you their outlook, they're really de-risking it given where PCs are. That with Intel, you worried in Q1 and at their analyst day when they told you they thought PCs were going to be flat. Now you worry following their Q1 earnings, where again they've told you that yes, PCs are below our prior expectations, but we still see a better second half.
What about this whole Mobileye thing? I mean, it got a pop about a spinoff on that. That was like, this might have been this selling opportunity here. I mean, what's going on with that?
So with Mobileye, Joel, I think Mobileye has built a dominant position in sensors and driving, self-driving, not self-driving, but assisted driving capabilities today. And I think that when they announced the spinoff, semiconductor companies were getting huge multiples. Mobileye's financials look great. And so that's why you saw Intel get a pop, because clearly from a sum of the parts perspective, if you were valuing semiconductor companies at the crazy multiples that they were being valued at back at the beginning of the year, divesting Mobileye would create this nice sum of the parts story. I think now, in part, semiconductor multiples have come down, so Mobileye's simply not worth as much. And then the questions that have developed over the last 3-4 months are some of Mobileye's key customers appear to be using either NVIDIA or Qualcomm for their next generation autonomous vehicles. So yesterday you had a report out of Handelsblatt talking about Volkswagen, for instance, which is probably Mobileye's number one customer, shifting to Qualcomm come, I believe it's 2026. And so the concern there is, what portion of Mobileye's revenue and revenue growth is sustainable once you get into the 25, 26 timeframe, and you see customers like Mercedes, like BMW, like Volkswagen, shifting to use Qualcomm and NVIDIA parts.
And anything with partnership with GM going back to Intel? Someone asked about that in the chat. Are you familiar with any news regarding that?
I haven't heard anything new there, Joel.
Okay. All right, let's move on. We got just want to cover 2 more things with you before I let you go. Don't you love when you buy $1 billion worth of stock, right, in a down market in a weak tape, right? Look at the market was down like a couple percent last week, and this was up 7%. And then you announce an activist stake. You send a letter to the board of directors to unlock value. I mean, it's a great gig if you can get it. But how do you come up with $100 breakup fee in Western Digital? I'm sure you'd like to see that for your customers, but always amaze me when I see these kind of things. Let's talk about Western Digital and Elliott Management getting down and dirty.
Yeah. So what Elliott's saying about the disk drive operations of Western Digital being undervalued is something I completely agree with. Look, they did the math. They took Seagate's valuation, they applied it to Western Digital, and said, look, this portion of Western Digital should be worth roughly $17 billion, and the market cap for the entire company is $21 billion. And so that's valuing the flash operations, which are more than half of Western Digital's revenues, at $4 billion, which has been the case for the last few years. It doesn't make sense. So what Elliott is saying, in my mind, at least in that sense, is completely logical. Then you come down to, well, Flash is worth more than $4 billion, but what's it really worth? WD paid 16.5 billion back when they bought SanDisk. They bid closer to 20 billion when the news of the acquisition initially came out. If you look at any of the Kioxia valuations or the proposed Kioxia valuations, you'd end up with something in the high teens, 20 billion type range for Western Digital on a relative basis, and Kioxia is surely the closest comp. Now, is it worth 20 billion? I don't know. I think it depends on how the split occurs. So certainly, if you end up in some sort of scenario where in splitting the two companies, you end up in a consolidated NAND environment, I think that NAND business would be worth more. Conceivably, given the volatility of that business, and it seems like investors don't like NAND in particular because you've got a number of players. It's a price takers market. There's a fair amount of volatility. Could the real valuation be 10 billion, 12 billion, something along those lines? I think you could make a cohesive argument that it is not a high teens 20 billion type, or it shouldn't be valued in the high teens 20 billion type levels. But again, I think the net is that Elliott's coming in. They're creating a catalyst that potentially unlocks some of the value of Western Digital hard drives business, and that there's real value there. And the NAND business is worth more than 4 billion. It's just a question of should the premium be so if we said NAND business is 12 billion, not 4, and you're talking about 17 billion-ish market cap, should the premium be 50%? Which would suggest with WD having been at about $50 that the right level is more like 75, or is it $100 stock like Elliott suggests? But regardless, it's at neither of those levels yet, so I still see upside from here.
All right, Don, last one for you here. SIMO, Silicon Motion Tech Corp. Now here's stock. Trading within an earshot of its all-time high back like at 95, but it's some takeover chatter. It looks like you got the chatter, then you got the denial, and now people are trying to figure it out. Any insight into potential takeout of SIMO?
Yeah, so there has been a ton of consolidation in the semiconductor space over the last 5 years, and one area that really hasn't benefited is NAND controllers. You've seen a little bit of it where Microchip, for instance, acquired an enterprise business, or when Broadcom bought LSI, they acquired some IP there. But this market has gone from a multiplayer market where you had a lot of the fabs building their own SSD controllers to a market where more and more customers are turning to Silicon Motion and Phison, so something of a duopoly, and so the market itself has become more valuable and more predictable in my mind because again, with a duopoly structure, you end up with better pricing, you end up with more predictability in terms of wins, and then the other nice thing is that when you think about the growth of IoT and the growth of edge computing, all of those devices, whether they're a Roku box or your Alexa, they all have some embedded storage. And you need a controller, and so you have this new opportunity that really Silicon Motion and Phison are poised to deliver the at least the storage intelligence into those devices, and so I think that market's become more attractive. That it's an easy tuck in for a number of names. Of course, you have to get by the antitrust regulators, and if you're a company like Broadcom, where you have the FTC concerned around how you deal with pricing, maybe that raises some questions. But I think there are a number of fabless semi companies that could easily integrate Silicon Motion. It's got a really attractive valuation. And I think it's got attractive growth prospects moving forward. So, yeah, I think it's a great takeout candidate. It's just a question of is there an offer? What does the board want to do? And does the CEO want to sell. It's been his company for a long time, and it's unclear what his desires are.
Matt Bryson, he's Senior Vice President, Equity Research in the hardware sector for Wedbush Securities, joining us here on PreMarket Prep Plus. Thanks, great information, and we'll talk to you again soon.
Thanks for having me, Joel.
All right, what do we got going on here? S&Ps are just had a little decline between that 8 and 9 hour. Nothing serious. Worked our way into the 4170 handle, catching a bounce, and now we're just hanging out mid-range on the session right here at 4180. Tight range. Going to see market hanging out here for the Fed meeting at 2 p.m. Eastern Standard Time, and see what they have to say regarding the rates and what's going on with supply chains, and if Mr. Powell thinks inflation's slowing down at all. So Eduardo and Eagle and Martin, Jar, what issues? We got a few minutes here I can cover. Going into that opening bell here, we're just 6 minutes away before the opening here on Wall Street. So give me some issues that you want to take a look at. Just real quickly on the upside for the S&Ps, 91. If you get through that on a quick rally this morning, don't get too faked out. Yesterday's high came in at 95.75. On the downside, the close is your good number for you. 69.25 was your close. 67.75 was your pre-market low. I think you hit that between the 3 and 4 hour too. So keep an eye on that from any continued downside in the market. Of course, all the fireworks will come at 2 o'clock. I see Jar in the chat, so I want to take a look at the euro dollar, and tight. It's getting tight down here. Found a good support, and now it's having an inside day. So let's see if you can bust out. Not looking for a lot of upside until you get over 1.06. So that's for a quick look at the euro dollar here. Quick update. Let's just do real quick. On the earnings fronts, we have some disasters to talk about here. Lyft now migrating back towards that pre-market low. Pre-market low comes in at $22. I got something for you here on the monthlies, and on the monthlies, 21.34. So there we go. I mentioned before I was looking for the that area to potentially cover a short, not really thinking about a long in that yet. Let's just also take a look at Uber. We talked about that. That is came out with their report after it was getting punished because of the lift. But you know what? It doesn't make any difference now because Uber now is couldn't hold yesterday's low. We were talking about that a little bit on the show. And then boom, it comes in under $27. The low of the move. The low of the move has been, this is a new low of the move, 28.28. What else do we have on the monthlies here? Not much. 28.48 was another monthly low. Next monthly low, 26.58. That's not too far away. That could be in earshot here. Eduardo Gonzalez is still focusing on that AXP on the long side. Didn't pull the trigger yet, I assume, because you're looking at it. Another tough day in the market. This had an all right day. I mean, you can lean on this current low right here. I'm not sure what your appetite for risk is, 67.51. A lower low by you had 82.31 was your low on Friday, or high on Friday, and then it came all the way down to 74.88. Looks like sellers are still compressing in this one, so I'm not ready to jump in the pool yet on this one. Of course, moving good with the market could help things out, but right now you have nothing to lean on until that 167.51. If you want an intermediate level, let's keep an eye on this, Eduardo. The low close just for this recent spout has been 170, 162. It would have been a decent buy yesterday. You could have made some money on it. Would have had to take some heat to 170.33. But that's what I'm looking at. That's been the low close of the move here. I think a lot of this is just going to be very dependent on what happens with the Fed and what happens with the market. So that's a look at AXP. That's what we have time for today. Heading into the opening bell, folks. Thanks for joining me this morning. Hope you enjoyed our guest, Matt Bryson. Back at 10:30 with pre-market prep with stock odds, and then also at the close at 3:30. So thanks for joining me this morning. We'll see you guys later on.